Saumitra Chaudhuri, Advisor Planning Commission, says that the curb in gold import has helped in reducing the trade deficit. He also asserts that there has been a decline in investment demand for gold.
The curbs on gold import has served us very well since actually May it was imposed. It started having an effect from June onwards, and it has curbed our trade deficit very considerably. Our current account deficit has become comfortable. We know the data for September ended, and my estimates for December also roughly around the same amount, $5 billion or so, give or take a little bit. So it has become more comfortable. I think the government wanted to use the curbs on gold import as a temporary measure, not as a permanent measure. You see, the issue is that demand for gold has two components. One is the customary demand for jewelry, and the other is the investment demand. I think the expectation is the investment demand for gold has gone down as gold prices are sort of not moving north. Dollar price of gold and rupee is more or less stable. So the investment demand for gold has gone off, and customary demand for gold was never a problem for us to meet. It is really the investment demand for gold that sent all calculations off. So maybe slowly looking at slowly easing it, but I don't exactly know what you mean by when you say that the government is planning on doing so. But I can see that there would be an end at some point, either in this quarter or perhaps early next year. It can't go on forever.
So my last question to you, do you think that, from the point of view of the Planning Commission, do you think that the Finance Minister will be able to meet the red line on fiscal, given the fact that we've seen a tepid divestment, we've seen a tepid demand as far as divestment is concerned, and also the fact that the spectrum, the proceeds that we see from spectrum sales, that is also not looking good?
You see, last year he was able to keep his target on a much more adverse circumstances. So I would expect that he'll broadly be able to be very close to where he intended to be. I think you should look at the deficit not only in terms of percentage of GDP, but in absolute terms. I don't think you'll be too far away from. It will probably be very close to it. Beyond that, I do not wish to comment, but I am not in the knowledge of what exactly is going on.